Bitcoin to $150,000 in 2026 is still in play, and here's why. All right, so we're going to take a real quick peek at what Bitcoin is doing, around $67,000, $67,265, excuse me. But obviously things have been down. Bitcoin has been down. Bitcoin has been hovering around 70,000, high 60,000s for a little bit now, and I still think it is possible that we can drop lower. I think we can drop lower to around the $60,000 mark for Bitcoin. Obviously, it's not guaranteed that we will or will not, but I do think it's possible. I want to put that out there before. But you're going to find out why by the end of the video. Make sure to watch the end of the video so you know why Bitcoin hitting $150,000 is still in play in 2026. All right. So Bernstein maintains $150,000 Bitcoin forecast despite market pullback. So despite Bitcoin's recent downturn this month, brokerage from Bernstein reaffirms its $150,000 price target for Bitcoin by the end of 2026. Remember, earlier this year, I was talking and I was saying that Bitcoin could hit $150,000 to $200,000, and I thought that was realistic. Obviously, this past month and going into February where we are right now, it's kind of taken a toll on a little bit. It's taken a toll on sentiment, obviously. Sentiment has been controlling the market, and we've had a lot of uncertainty. So the sentiment obviously hasn't been great. Obviously hasn't been where we want it to be. We want sentiment to be high and happy and all that stuff, but it hasn't been like that, guys. But I still think that Q3 and Q4 can give us a good chance this year at Bitcoin hitting $150,000. So Bernstein's recent analysis suggests the current downturn is a temporary confidence shock, which I think is 100% true, rather than a fundamental breakdown. Its analysis suggests that if liquidity conditions improve, Bitcoin could quickly reassert its growth trajectory towards the $150,000 region by year end, supported by deeper institutional infrastructure and broader real-world integration. And that is what's being mainly worked on right now. And it's a big kind of step in a big focus, and especially XRP. XRP is one of the cryptos that could easily be used in the banking system and the financial world. And they have been pushing, as we see in the Clarity Act, and we've been pushing for Bitcoin, XRP, crypto to be involved in the infrastructure and financial infrastructure, institutional infrastructure. And I think at some point it will. It's just a matter of time. But I think that if we get any sort of anything into the institutional infrastructure in Q3 and Q4 this year, crypto will go insane, and Bitcoin will lead the pack there. Okay, so analysis labeled the pullback the weakest bear case in Bitcoin's history, stressing it reflects a confidence shock rather than a breakdown in fundamentals. Bitcoin's lag behind gold was expected, as the asset still trades a liquidity-sensitive risk asset rather than a mature safe haven, which basically means when the crypto market isn't going so well and people are uncertain, they put their money into gold because it's been known to be kind of a safe place to put your money instead of Bitcoin or XRP or Ethereum, which can move a lot. And it's very volatile. As gold, it's kind of a safer place to put your money, and people feel safe putting their money into gold instead of Bitcoin, which I hope at some point, which I think at some point will change when Bitcoin is more established in the real world and in all the infrastructure that we have today. So Bitcoin to 150 grand is still in play, and I believe so. Bernstein analysis led by Gautam Chugani, so that's hard to say, I don't know if I said that right, reaffirmed their bullish long-term outlook for Bitcoin, describing the ongoing correction as the weakest bear case in the asset's history. In a note to clients today, they argued that the pullback, which pushed Bitcoin down to $60,000, reflects a crisis of confidence rather than any failure of Bitcoin's underlying system or investment thesis. So nothing fundamentally wrong happened with Bitcoin where Bitcoin messed up somewhere or something. It was all based on sentiment and what was happening in the political world and all that type of stuff. We saw it mainly with the Federal Reserve chairman being nominated by President Trump, and that brought the most uncertainty, which kind of took out the liquidity that we still don't have back in right now, and we wish we had in, because then we'd be a lot better than we are right now. But it was Bitcoin dropping was nothing specific to Bitcoin or nothing specific to crypto. Stocks dropped. Gold and silver even dropped, which are supposed to be the kind of the safe havens, as we saw in this article. But everything dropped, guys, and we've just seen the liquidity stay out of crypto because crypto is a risk-on asset. It's risky. So we've seen the money stay out, and it wasn't a specific problem to Bitcoin's fundamentally Bitcoin and it wasn't a specific problem to Bitcoin and Bitcoin doing something wrong or anything like that. Moreover, the firm stressed that none of the traditional triggers behind past Bitcoin crashes, including systematic breakdowns, hidden leverage, or major insolvencies, have emerged this cycle. So that's kind of talking about the fundamental, how nothing fundamentally went wrong. Instead, Bernstein said that the market is entering an unprecedented phase of institutional alignment, supported by a pro-Bitcoin U.S. administration, accelerating spot Bitcoin ETF adoption, growing corporate treasury exposure, and sustained engagement from global asset managers. So we see that a big focus as of right now is this institutional alignment. And this has been a big focus, and it still will continue to be a big focus. And when this happens, guys, I keep hammering it down, but it's important, guys. Crypto, XRP, Bitcoin will go crazy, and Bitcoin will lead the pack. It'll head to 200 grand. XRP will head to $5. All that good stuff that we would love to see right now. On this basis, the analysis reaffirmed their $150,000 Bitcoin price target by the end of 2026. From current levels at around 69,000, we're at 67,000 right now. But Bitcoin need to gain roughly 117%, implying a market cap of about $3 trillion.